Hey, what is up, everyone? Welcome to Market Psychology 101, where we look for value in the markets when there's fear and are cautious when there's greed. We are going to be checking in on some of this week's earnings reports for stocks, as well as the magnificent seven stocks, or as people are starting to now coin it, the AI 5. So, starting off with fear and greed, we can see that we're dipping down into the lower ends of greed back towards neutral on CNN and on pie vesting. Kind of similar. We are overall in this downtrend, so maybe we're peaking here and coming back down to neutral territory. As I mentioned, we're going to be taking a look at some earnings reports, any that really interest me personally. And I'll be the first to admit here that I did not know Man U had their own stock. So how about that? Teams can do that. But maybe we'll take a look at Delta, PepsiCo, and a couple of these bank stocks, JP Morgan and Wells Fargo. I think those would be the most important one. WD-40, they've been around forever, so maybe we'll even take a quick peek at that as well. First, let's take a look at the S&P 500. And as you can see, overall, it has been in this uptrend. Now, I have this large parallel channel drawn out that's been taking shape ever since the 2008 Great Financial Crisis dip. And as far as the peaks have gone, it has not gone above these lines. Now, in recent history, you can see we've had some other peaks, so drew some parallel channels for those. We did get above this one that honored the peak in March of 24 as well as August of 22. The next peak we have here is in March of 22. And so where that would take us if we were to hit that sometime soon is basically an S&P 500 around 6,000. If we were to get to the very upper end of that range, we're looking at the mid 6,000s. The VIX, important to look at, and it is really at historically low values even still. So when the VIX spikes up 25 or above, that tends to be very juicy times in the market to dollar cost average in and buy. And for any of you, by the way, who are new to this channel, I really try to take a look at the conservative, value-minded investing, ways that we can simplify how to look at stocks when we can find better value for your investments if you're looking long term. So when I look at stocks, I'm looking at companies that I truly believe will be around in 10 years, and we can let that money sit and stay there. I also take a look at crypto and Bitcoin mining stocks as well for some more riskier type plays, possibly trade vests, make some larger gains in the medium time frame, and then roll those over into safer assets. So VIX still low. Maybe it's going to start spiking up as we get closer to the election within the next 4 months. Those tend to be more volatile times. As far as the U.S. 10-year versus 2-year, we still have a yield curve inversion. When this uninverts and gets above the zero line, then you have to start watching very carefully, because it usually uninverts within a month or two of when the Fed cuts rates. And the last two times in 2008, the Great Financial Crisis, you can see here, this is around July of 07, and this was the dot-com bubble. This is January of 01. Within a year and a half, or about a year and a half, 18 months, was the market bottom, at least for the stocks. So when we uninvert, that'll be something to watch for. Unemployment rate, we're still in this uptrend here. It is at 4.1. So let's get over to the AI5 because I don't think I really need to take a look at Tesla. Maybe I will now that I said that, because it has been a while. And let's first start off with NVDA. We haven't taken a look at NVDA in a little bit. It's been a few weeks. If you guys have been waiting for my stock videos, I have been on a vacation. I am back. So I drew a fib from this prior high to the low, and NVIDIA hit that 2.618 extension. Didn't really close above it. It's still on the daily above that 20 line. And you can see here on the RSI, a little bit of minor bearish divergence. So higher price action, lower in the RSI. Not too much though. That's pretty minimal. but right here it is downward and the price is downward. So maybe we just end up going sideways here for a few months. Something I am curious to take a look at, because NVIDIA, back when it was really spiking up, I was looking at the pi cycle, and I know this is used for Bitcoin, but the fact it was getting above it on the weekly told me this thing was very overextended. And so typically when it hits this pi cycle area, it tends to go sideways or down. And not only did it hit it, but it got above it and stayed above it, that long moving average. So NVIDIA, very overbought. And, could it go higher in the meantime? Sure. But something to consider that a lot of other YouTubers do not talk about, and that is market cap. Yes, NVIDIA had a stock split recently. As you guys might remember, it's trading for 1100, 1200. Now it's at 129. A stock split is only psychological. It does not make the company cheaper, like you'll hear some people say. That's nonsense. So they did a 10-to-1 stock split. So basically, if NVIDIA was at 1200, 10-to-1, that means each share is then 120. It still has the same market cap at 3.18 trillion, and that's about where Apple and Microsoft is. So if you invested $1,000 into NVIDIA right now, that would mean its market cap would need to double to 6.36 trillion. So just keep that in mind. If you're able to buy in around the lows here, congrats. It's done 11x, something like that. But as far as how much longer this will keep running, who's to say? It's already pretty extended. So if you wanted to take some profits, I would not be personally unloading right now, just because how much over the moving averages this thing is. This thing has been running hot for quite a while, and it's also moved up that 11x we talked about. It's moved up that much in about a year and a half. So you can see here almost 1,200% in 637 days. So getting closer to 2 years there. But yeah, that's not normal for any stock to be doing that. So just do be mindful. NVIDIA, in my opinion, wonderful, great stock. But as far as value, it isn't quite there yet. Maybe when it gets down to the 50-week moving average, we can start talking about it. Next, let's take a look at Microsoft. So Microsoft, we again drew this fib from the prior high to the low, and recently it hit that 1.618 extension at 434, and it is just going well up and above that. So the next key area to watch for, and you can see here it hit it a couple times, third time it broke through. The 2618 is at 570. And so Microsoft at 3.37 trillion. If you're wondering what the market cap would be if it was at 570, I'm going to do this calculation on my calculator, on my phone calculator right now. So you're going to have to trust me, bro, on this one. So I'm just going to take 570. I know there's some decimals. We're not going to worry about that. Divided by 453. That gives us a number of 1.26 roughly, and we multiply that times the market cap, 3.37 trillion. So if Microsoft gets up here, it's going to have a market cap of 4.24 trillion. I know it sounds crazy. I remember when stocks were first getting into the $1 trillion valuation all on their own. So, maybe 4 or 5 trillion is going to be the next kind of psychological barrier. 3 trillion has been that barrier for some time. Maybe 5's the next one. But yeah, this one, Microsoft, NVIDIA, two of the best stocks in the world. I also like Google and Apple a lot as well. Great companies that I believe will be around in 10, 20 years, of course. But as far as getting good value and investing right now, I personally wouldn't. I'd wait again until we came down more towards these moving averages, or the RSI is lower. Speaking of RSI, let's stick that back on. and we will stick with the RSI. Do we notice anything here? Overall, the RSI has been having lower peaks. This one isn't done, but this could be some bearish divergence if that's a holdout. But as far as bearish divergence, these things can take months or even years in order to play out as far as when the bearishness does eventually come through. Apple, again, this one just looking very bullish. 3.54 trillion. So, man, guys, remember we were talking about Apple down here when it hit the 100-week moving average. I was telling you guys how when it's at the 100-week or lower, Apple's only there once every other year, if that. And so that was the start of a really good value time to buy. And if you bought Apple here at around 170, you'd be enjoying some good profits right now, to the tune of roughly around 37% in a very short time, just since April. So, Apple doing very well. The next fib extension, the 2618, is at 258.22. So watch for some possible take profits in that area. Amazon has finally steadily stayed above the all-time high. So here it's tagged this all-time high mark that it hit the 189 once, twice, three times, fourth time it finally broke through. So Amazon moving on up. Again, watch this RSI. Hopefully it doesn't just roll over and can keep going higher. Otherwise, there's bearish divergence. But next area for Amazon to look for, should it continue bullishness, would be 255. And 255, and it has a $2 trillion market cap. So it'd be another 20% up, and that'll look pretty good. That'd be about another 0.4, so maybe get to around 2.4 trillion if I'm doing my math correctly. Amazon looking bullish. All these things are moving very bullishly, so at the very least, if you did want a dollar cost average strategy for any of your favorite stocks, you could be looking at the 20-week moving average or even the 50-week. You can see here good value times. When it gets lower, a lot of people, they get worried and psyched out, but those tend to be the good value times to buy. Look at this. Google is coming up to the 1618 at 193. How close is it to 193? Let's go to the daily. You can see it got really close, came down to the 20. So, not shocked that there would be some take profits just underneath there. You don't always have to wait for the exact fib if you're looking to take profits. So Google, watch what it does right at the 193 mark. Maybe it's going to test it another couple times or come down. But you can see here, remember we were talking about Google when it was at the 200-day moving average, and that was the last, really good value time to buy. So Google overall doing well. Watch for the reaction here at 193. Meta, we'll do Meta and Tesla. Why not? Meta is at the 50-day moving average. Let's go out to the weekly. Weekly, it's above that. And as far as the 1618 extension, we're watching for 567. So 567, it's getting kind of close there. And, it hasn't been above around 544. So it's come down a little bit of a sell-off today. But maybe it'll find some support at the 50 or even the 100 at 477. So lastly, let's take a look at Tesla, and then we will go into those earnings reports for this week. So Tesla, man, look at how many days straight this thing was green. So moving on up, it got above this 618 macro fib. If we zoom way out, you can see this macro fib. Again, I'm drawing from the height of the low. We're looking at price in between. Got above that 618, but you can see here on the daily, came back down to it. Now it's resting on it on the daily. So broke out of this downward descending trend line, where we caught all of these peaks. Is this a possible fake out? We'll see. Now that's above the trend line and the 618. You want to see it stay above those trend lines and even keep structure up here if you are bullish on Tesla. So Tesla, right now it has a $792 billion market cap. This one I do have a lot of concerns of. Love Tesla's balance sheet. I really do. As far as their assets to liability ratio, extra cash on hand, their balance sheet is great. But you can't ignore the fact it is an automotive company. That's where most of their profits come from. And its market cap is valued around 18 times higher than Ford or GM, and it has half the overall revenue. So Tesla, in my opinion, is very overvalued as a stock. But who's to say? If we were to get into any sort of recessionary environment for stocks, this one I would be very worried about. But if 20 years from now we're all in self-driving cars, you'd probably be sure that Tesla would be one of the companies leading the way for that. So if you're investing in the Tesla here, you're thinking about it in the very long term. We did talk about Tesla when it was at these dips, most recently, this 100-month moving average. And that was a key level. If it fell below, good night. You'd be watching for, maybe some structure here at around 50. That'd be worst case scenario, but pretty big green monthly candle here. On the monthly, the one part that would concern me is look at that fat candle, but then we just have resistance wick above it. So we'll see what it does from here as far as finding support or, maybe as a little bit of a retracement. So let's get into the earnings reports quick as we can. Man U, again, I did not know that Man U had a stock. That is interesting. We're just going to take a quick peek at that and okay, it's going sideways as a market cap of 2.75 billion. Yeah, get yourself some Man U stock. How about that? Hey, I wonder if that's a thing that more sports franchises might be doing. We're not going to look any further in that. WD40 Football Club. All right, so man, look at that earnings reports, and we have this big spike on the weekly. WD40 on the weekly came down near the 200, was resting on the 100, and man, I had some good movement upwards. So if you're able to catch it at 220, this thing spiked up to 250, is now at 240, and it's more towards the oversold area on the RSI. Let's actually get rid of the RSI. Let's add in our buy-sell signal indicator. Yep, of course there's going to be a buy signal there, and that spike still overall a lower high, but maybe this can be the start of some momentum moving forward. Monthly has this long-legged doji. Those things can go either way. But yeah, maybe you want to wait a little bit further for more confirmation. But as far as WD40, you can see here, we do have this wedge forming. And yeah, I would, if you love WD40, not the worst area to put in. But I personally would wait a little longer. I wouldn't want to buy right after a giant spike like that, especially when it spikes in a couple days, 10% plus. That's chasing right there. So I'd rather be more patient. And of course, pick your stocks, write down a list of half a dozen or more stocks that you like, or products that you like, and products you use. I tell people if it's a product you use, that's insider information. So if that product is still working great, you'll be happy to keep buying it, investing into it. But if that product starts to suck, then you're not going to want to keep putting your hard-earned money into that company. We're not going to take a look at ASS here. Let's take a look at PepsiCo. I believe Pepsi had a little bit of a downturn in recent history. Pepsi and Coke, two of the best stocks in the world out there, 229 billion, and it's not just soda. You can look this up, or pop as some of you call it. It's not Coke. Some of you Southerners like to say this is Pepsi, not Coke. You can't call everything Coke. I will fight you on that. But if you want to call it pop, fine. Soda is the word I like to use, but it's more than just a soda company. And as you can see here in the last year, we're overall at the lower end of that range. So if you really like Pepsi and you use their product, you like their product, this is a good value time to buy. Now, did have that earnings report, and it did have this big spike on the daily, a move of 3.5%, so pretty good there. But again, it does have that wick. It didn't quite get up to the 50-day moving average. A lot of resistance there. 382 fib, all the moving averages did draw that fib from the high to the low. Overall, I'd expect it to come back down to earth, settle around this 164 price. But if you were looking for good value, I'd say it's there. And right now, it's on the 200-week moving average. And if we go back in time, I mean, look how often that happens. It's not often. Before 2023, last time it was at the 200 was in March 2020, the COVID virus. Before that, we had 2018. Before that, there is this crazy spike in 2015. That one was bought up quickly. Before that, 2011, end of 2011, early 2012, and of course, great financial crisis. So I'm just going to group these together. 2, 3, 4, 5, 6, seventh time since 2008. That's about once every other year that we are at this good of value. Now, could it get lower? Yes, this wick concerns me. And if it possibly goes lower, I mean, here's the great financial crisis, got all the way down to the 200-month. As you can see here, a couple times hit the 100-month. But if that 50-month moving average doesn't hold, I would be buying, me personally, at the 100-month moving average. That would be good value. And again, market psychology, that's what we try to teach here on this channel, is like Warren Buffett said, be greedy when others are fearful. People talk about buying bottoms and selling tops. It's not easy because our emotions get in our way. But of course, do your research. Look at the balance sheet. Set a budget and never invest more than you're able to lose. If you're picking stocks to invest in on the side, make sure that you like the company. And if you're buying it here and it goes lower, then you should love buying it at lower discounted prices. I cannot stress that enough. I'm going to keep preaching that on this channel because it is very hard for people to wrap their minds around. For myself, a little trick I try to play is, to think like a robot and be as unbiased as possible. Just take a look at the numbers. If it's good value, I've done my research, I believe in my research, then I can dollar cost average in from my budget each month and just forget about it. And, in 5-10 years, hopefully it pays off. So Pepsi, overall, I think it's good value. And if it gets lower to this 143, I'm going to think it's amazing value. So love Pepsi as a stock, love their products. Again, they're more than just a soda company. Delta, let's take a look at Delta. Airline companies, their stocks can tend to be very volatile. And oh my God, yeah, you see it right away there. There's a 200-month moving average. Let's go down to the weekly. The monthly does have a sell signal, so funny we started out with that. Weekly, man, it's coming down, hit the 50-week, and then not much lower. At 41, we have the 100 and 200 weekly. So could it get under there? Look at how much this thing whips up and down. It looks like this thing's very manipulated by traders. So, I personally wouldn't be investing into Delta with that type of price action. But if you have ice in your veins, then by all means you could go for it. This thing gets under its 200 weekly. Way too much for my liking, and plus it's airlines. Typically on earnings reports, airlines don't have a good asset to liability ratio. Let's just take a look at that quick. So Market Watch, not sponsored or anything, but I like to take a look at this as far as assets to liabilities. We'll just compare the two here. So, on this site, if you type in, we did Pepsi there, and then we're going to click financials, balance sheet, and we'll just take a look. There's more to look at than just what I'm about to show you here. But total current assets, you can see it's growing. It's at 27 billion. Total current liabilities, it's at 31 billion. As total liabilities at 81, total assets at 100. So the ratio is above. So that'd be maybe like a 1.2. You want that number to be positive. Okay, so 1.2, pretty good as far as total assets, liabilities. Some of the strongest companies in the world have a ratio of 2 or higher. And then we're going to take a look at Delta. Delta Airlines, where is it? Here we go, DAL. And let's take a look at the financials on this one. We're not going to do balance sheets for everything, but I just want to show you just the very first step you could take. You can look at which way it's trending. Are the numbers getting bigger, smaller, all that sort of stuff. Obviously do more research. Assets, 81 billion. Total liabilities, 70 billion. So for an airline, really not bad. I was assuming it would be lower. It isn't. So do your research, and it is a $28 billion company. So Delta, not bad. Happy to see an airline company has a positive number, especially with all the news about Boeing and Alaska Airlines. Heck, maybe Alaska, maybe their stock, with their ties to Boeing. That's not surprising to see, but again, could be good value. Let's finish with a couple of these bank stocks. Wells Fargo and JP Morgan, WFC, Wells Football Club. After the Man U thing. So Wells Fargo on the weekly, we do have this sell signal. It looks like we're maybe peaking here. It ran up pretty good. Would not be surprised to see a little bit of a 50% retracement. So if we just draw from that peak, from that bottom to that peak, we also have the 382 here in that 50 moving average, 50% retracement right around where the 100 is. So if it did come back down to earth, I'd be watching these levels around 52 and 50 for Wells Fargo. And actually, let's zoom out a little bit. I'm just curious. Man, that is volatile. It's crazy. Next, let's go to JP Morgan. And typically when bank stocks are doing well, I believe that tends to be the time when cryptos are overall doing pretty good. So let's see here. This ran up. I'm looking at when crypto was doing good. Yeah, bank stock was doing great there at the end of 2017, 2021. Yeah. So, hey, for any of you crypto enthusiasts out here watching this, there tends to be somewhat of a correlation between the bank stocks and how crypto performs. So overall, money is still flowing into these bank stocks. JP Morgan, $588 billion. And, this one's looking pretty solid. So would I be buying it right now? No. But if you love JP Morgan, again, you could be watching these moving averages. Look at this. Hit the monthly 100 moving average a couple times recently. Very good value. So as far as a fib, let's go from this high to the low. But let's zoom in a little bit. Let's go to the weekly. Should we do that high to low? I'm going to do this one right here because this was obviously the COVID sell-off. And so we're just going to draw our fib from that high to the next low. And what do we notice? All right, so it's gotten above the fake out range, came back down to it at the 1.09. And then as far as the extensions, when we're looking above the price, we take it off log scale. 217 is a 1.618 target to watch for. So I'd be watching for 217 there for JP Morgan. So as far as what we noticed with our AI5 stocks and overall market conditions, still low volatility. Things are still looking bullish. Pepsi, really good value. So that could possibly be a stock for you guys to add to your watch list if that's one you're interested in. That's a stock I have researched, and I think it's a really good stock and one that'll be around for a long time. They have a lot of products, but again, do your research, write down a list of stocks that you like, that you use, And when you do your research, write down an unbiased list of pros and cons. Look at their balance sheet, look at their financials, see if it's something you really like. And if you like it enough to put money into it, when it's up here, again, you need to love it when it's down here at these lower moving averages. I try to show on this channel a more simplified, conservative approach on how to dollar cost average in or when to. Again, there's no guarantees. Nothing here is financial advice. Things can always go lower. But if we can increase the value of our hard-earned money as we try to invest it, that's what I'm trying to help do. So we're not just throwing money blindly at the stocks, because you're like, hey, I use Apple, I like Apple, I'm just gonna throw money in it, forget it. Okay, you do you make your own plan. I'm not going to tell you guys what to do, but you can also look at some of these moving averages, the fibs, and take a look at areas to possibly throw in more or dollar cost average in more and set more of a budget so you're smarter with your money and you get larger returns overall. Sometimes you can stay very extended for a while, but when it does come down, that can be go time as far as putting in larger amounts of whatever your set budget is. So anyways, hope you guys enjoyed the video. 30 minutes looks like that's been my average lately. And yeah, enjoy the weekend. Hope you all are getting out there, experiencing some good weather, doing some new things, having fun this summer. So yeah, hope you guys enjoyed and take care.